Hello and welcome to Rajya Sabha TV special program Agenda 2014. I am Krishnanand Tripathi. In this special program, we are going to discuss the issue of foreign direct investment in multi-brand retail, an issue that has triggered intense political debate among several political parties. In this program, we are going to discuss the issue in the context of general elections and also its long-term impact as an economic policy.
On December 7th, 2012, the UPA government won a keenly contested vote in the Rajya Sabha. The vote capped an intense debate on whether India should allow 51% foreign equity in multi-brand retail. The government claimed at least 11 states were totally in favour of inviting foreign investors to India. Parliament's endorsement in the form of the vote could have finally ended the disagreement on the contentious subject. It should also have resulted in some high-profile global names setting up shop in India. But 2 years later, none of that has taken place. Indian consumers and producers are yet to see any of the widely reported benefits of having FDI in multi-brand retail. Ahead of general elections 2014, the debate on retail FDI is as wide open as ever. Neither of the two main political rivals on the national stage are in agreement on the issue. In its manifesto for the general elections 2014, the Congress has pledged to continue support to multi-brand retail, while the BJP wants to scrap retail FDI.
Well, our policy is very clear and it is consistent. We are opposed to FDI in multi-brand retail. But the party is open to FDI in general. These should not be confused.
In its high-pitched campaign, the BJP has been insisting that inviting FDI in retail could cause huge job losses in India.
Our estimates are that approximately about 5 crore or 50 million people are related to the retail business, and to immediately, threaten their livelihood, their security, in terms of economic security, is something we are not open to.
The Congress, on the other hand, is accusing the BJP of pursuing a partisan electoral agenda, making the government look bad by willfully hurting investor sentiment ahead of the elections.
FDI coming in or not, do you allow organized retail? Either BJP should come out and say that we are totally against organized retail. Then that is a policy debate. If there is organized retail and some Indian entity wants to bring in foreign equity in it, what's the objection? It's only that the color of the money, I'm sorry to say.
The Congress also reminded the BJP that when it came to power in 2004, it didn't overturn some policies of the NDA government that it had disagreed with, only to avoid sending wrong signals to the foreign investors about the stability of Indian policy.
They were in government during the NDA period. They did some very strange things. We were opposed. We had reservations. Whether they opened up some sectors 100%, where we thought calibrated opening was better. But when we came into government, we did not reverse, because that would have hurt the image of India as an investment destination.
Economic experts feel the issue has been unnecessarily politicized, actually harming the nation's interest.
Retail has always been politicized. They come into the manifesto, they are taken out of the election manifestos. It has been unduly politicized, for which the country has been suffering. There are few areas like retail, education, foreign bills in education. These have been very, very politically disputed and talked about without any real economic reasons for preventing.
Policy flip-flop, if I can use that word, plus utterances of some political parties and their political leaders has left the potential investors, including companies like Carrefour of France, who were expected to come here, into a bit of a, I would say, confused state.
One of the chief arguments of the BJP is that the government wasn't able to build consensus around its policies.
Government of India, which has come out with the policy, would necessarily try to look at only the benefits of it. They must bear in mind that even Congress-ruled states, including their Chief Minister Oman Chande in Kerala, opposed it. FDI and multi-brand retail.
The Congress maintains that not just the vote in Parliament, even a 3-judge Supreme Court bench found no merit in a PIL against retail FDI.
Now, who is objecting to that? This means that the interest of the farmer, who even as per the Supreme Court judgment is going to be benefited, and the consumer. So for whom is BJP speaking? We have to understand what is their objection to foreign money being invested. They say we are not against FDI, but we will not allow this. What is the motive?
Even as the debate was raging, the international audience, and among them a significant section of potential foreign investors, kept waiting and watching. Most of the international reports devoted to India speculated as to what will happen to the retail FDI policy if the government changed.
When you have very loud noises threatening the investors, if you're an investor and somebody is threatening you, you will think twice. That's what they have succeeded in doing.
The Bharatiya Janata Party feels it is not opportune. There may have been a situation for it if the economic conditions were not so. But after 10 years of the economic decline, of the India story being questioned, of unemployment being very high, of industry and manufacturing being in the dumps, one is not certain, and one certainly opposes it, the BJP, that we cannot take the risk with almost the 50 million people who are involved in multi-brand retail at their own. In terms of retail business, we cannot allow a foreign entity to come in with investments and threaten their economic security.
India's population of over 1 billion is buying like never before. Groceries, fruits, vegetables, shampoos, soaps, energy drinks, and countless other retail offerings are all seeing an accelerated demand. India's humongous retail trade is handled by 4 crore Kirana shops. These local shops service nearly 1.25 billion people every day. They employ 5 crore people. They are the second biggest employment providers after agriculture.
India as a market is a large unsaturated market. So today if the economy grows, both organized and unorganized retail will grow. So employment will be created in both these segments. Now, so therefore there will not be job losses.
Modern or organized sector retail, where big corporations provide hundreds of products under one roof, has been a familiar presence in India for the last 10 years. But despite its long innings, its market is limited to less than 8%.
Stores, by accessing goods directly, procuring them directly, can do away with middlemen who add to the costs and consequently the prices.
In 2012, the UPA government pressed ahead with a proposal to open up FDI in retail. It resulted in an immediate political backlash. Key ally Trinamool Congress walked away from the ruling alliance, claiming that lakhs of farmers will lose their livelihood.
There is always an apprehension and a fear that in a country like India, where you have a very large informal trading center set up, hawkers on rickshaws, hawkers on carrying on their load heads, selling things, and smaller shops, that they may not be able to compete with the cutting down of prices.
Supporters of retail FDI point out its enormous job creation potential.
Tell me how much is the job loss? I think there is job creation because in Delhi there is no other employment opportunities. Similar is the case of most other cities in India where there are no other employment creation opportunity, and organized retail as a stream has offered a lot of employment. Suppose if the retailer has a very strong aggressive policy, or we do not have a proper policy in place to do checks and balances, then there can be negative impacts also.
The sharp criticism from the opposition forced the UPA to discuss the issue in Parliament under provisions that require voting.
You implement this policy without manufacturing sector reforms, The first stage is going to be, we'll cease to be a manufacturing nation, we'll become a nation of traders, and it won't stop at that. You'll eventually have stores owned by the Americans, the French and the British, selling Chinese products, and India will second round become a nation of sales boys and sales girls.
हमारा विरोध कि अगर देश की अर्थव्यवस्था को और जनता को अगर इस निर्णय से फायदा होगा तो जो है उसका पूरी समर्थन करेंगे, लेकिन सीधा नुकसान होने वाली बात।
किसी निजी पूंजी निवेशक जो विदेश में है, क्या इतना विभाजन देख करके ऐसी आशा की जा सकती है कि आगे आने वाले दिनों में वो भरोसा करके एक बहुत बड़ा पूंजी निवेश हिंदुस्तान में लगाएगा? मेरे जानते ये संदेहात्मक है।
The Trinamool is definitely not anti-reform. We reject what the Congress-led minority government is doing today in the name of reform.
We, the members of Rajya Sabha, demand that you reconsider your decision and assure the House that FDI in multi-brand retail will not be allowed.
The government tried hard to address the concerns of all the opposition parties. In the end, political considerations decided the issue for some parties. After opposing the measure during the debate, Bahujan Samaj Party voted in favour later.
केंद्र सरकार की वर्तमान एफडीआई की नीति में इस प्लस पॉइंट को भी ध्यान में रखकर, अर्थात केंद्र सरकार की खुदरा बाजार के क्षेत्र में वर्तमान एफडीआई की नीति को देश के किसी भी राज्य में जबरन थोपा नहीं जाएगा। ऐसी स्थिति में इस प्लस पॉइंट को भी ध्यान में रखकर अब हमारी पार्टी ने कल यहाँ राज्यसभा में केंद्र सरकार के पक्ष में ही वोट देने का फैसला लिया।
Although the FDI policy didn't need parliamentary approval, the government required it to amend the Foreign Exchange Management Act to facilitate foreign investment.
Retail did not need a parliamentary approval, but what needed a parliamentary approval was the changes in the FEMA, which today prevents multi-brand retailers to repatriate profit. If there are restrictions on profit repatriation, why should I invest in this country? And also today, till today, FEMA has not been changed.
For the government, the vote in Parliament was as good as a validation of its FDI retail policy.
It was rejected. That's it. It was there before the Parliament. Lok Sabha voted. Both the houses have to vote. One has to read the act with clarity. In one house, it was never taken up for the vote, but when it comes to policy, both the houses had voted. And the vote is recorded. Nobody can deny that.
It's time for us to slip into a small break. After the break, we will discuss what happened after the government obtained parliamentary approval for its FDI policy. Welcome back. In this segment, we will discuss why, despite parliamentary approval, India failed to get any significant foreign investment in multi-brand retail.
The government may have felt the parliamentary vote was enough, but on the ground, it had little foreign investment to show for multi-brand retail.
One proposal has been approved, that is of Tesco and Trent of Tata's, and all the formalities and approvals have gone through.
Barring Tesco, no other foreign retailer applied for approvals. The last straw was when the world's largest retailer, Walmart, pulled out by calling off their joint venture with Bharti Retail.
They were negotiating with the government and the government wasn't bending or relenting. And that, combined with the slowdown, I think made them call off their venture in India.
After the vote, the foreign investors sought clarifications about the government's conditions. Not all of them seemed conducive for them, like the one that only permitted to open stores in cities with population of 10 lakh or more, or sourcing 30% requirement from Indian small and medium enterprises. There was also confusion about what happens if a unit took big orders from foreign players.
That if we start procuring goods from a small unit, which has today investment in plant and machinery of less than 1 crore, tomorrow we procure so much that it has to scale up. Then it may not remain small. Will you allow us to continue to procure from there?
Walmart is still not very happy with the sourcing clause of 30%. They have been very vocal that it will be difficult to meet because it has a lot of grey area.
Foreign investors also objected to investing 50% of the first tranche of $100 million investment in developing back-end supply chains.
Every time we bring money, will we have to put 50% in the back-end infrastructure? And we may open, one store, two store, every time you insist on that will our money have to go in back-end even when we do not need it, or when these services can be farmed out to somebody else?
Companies like Walmart have already made their back-end investment because they have entered till the wholesale route. So now they have to go from wholesale to the retail route, and you are again telling them make a back-end investment of 110 million. I don't need to.
There were other ill-timed developments as well that scared off investors. Allegations surfaced in the US that Walmart lobbied to get India to open its economy. The opposition parties latched on to these charges to corner the UPA government into ordering an inquiry.
Issues were raised, they had to be looked into. Issues were raised by our opponents, they thought that they will pillory the government. Whereas the lobbying per se and the filing, which is mandatory, was in the US. So the filings are in the US. The lobbying was with the US Senate or the State Department, not in this country. But since they made so much of noise, we said, okay, have an inquiry.
The inquiry against Walmart hurt investor sentiment, and the slowdown that followed eventually forced its exit.
Whatever they did, their expenditure was outside India, and what they did was to influence policy, getting the policy and the support of their government in the US to press Indian government to make reforms in the FDI laws.
Experts point out that retailing is a complex business, and it requires 3 to 5 years to start making profits for any player.
Retailing is not an easy business in India. It takes 3 to 5 years to make profit. In the 3 to 5 years that I will at all make profit, if you put in so many restrictions on my operation, why should I make an investment which is non-profitable, which I can see that I can make an investment in a delayed profit venture, but not in a non-profitable venture.
With its back to the wall, the government worked hard to persuade foreign players, but the anticipated investments would just not come. After all the hype, Carrefour of France decided not to press forward.
Let's see, they have to take a business decision. They have to identify their business partner, joint venture partner. Even if they come, they cannot come more than 51%. They can come below 51%. They can come at 25, they can come at 30, they can come at 50, 51. But the rest, there has to be an Indian entity. Now, the government is not going to do the matchmaking. Government's job is only to put a facilitating policy.
The state governments also played hardball. Experts point out that at the state level, stringent regulations operated to make it difficult for foreign retailers to set up stores.
Retail is something where the licenses are given at the state level, Shop and Establishment Act. Even if it is not in the FDI policies, final decision is with the state. But the problem of putting it in the FDI policy is that it has unnecessarily been politicized.
Further hurting the business, foreign investors seem to have poor knowledge of the Indian market or the buying habits of Indians. Experts also point to lacunae in India's retail policy.
If you really want to flout the policy, you can have two companies. For example, Tesco can have two companies, or Walmart can have two companies. In one state, it can operate on a franchisee model, which does not allow retail, FDI, and another state it can operate in a joint venture model. So the policy does not per se restrict your operation across states. Okay, so you are not having your best business model. So having 2, 3 dual business models are not the best way of operating.
The cumulative effect of all these factors made multi-brand retail through the joint ventures unattractive for foreign players, although single-brand retail did boast of many success stories.
Single-brand retail, over $3 billion of investments have come in. All the global majors of the world have come. You name, and they are very much in India. From Louis Vuitton to IKEA, to Lee Cooper, Marks and Spencer, they all are here in the single brand area also.
The biggest flaw in the policy was that it didn't ensure a level playing field for new investors. It favored foreign investors that already had manufacturing bases in India.
Multinational companies like India, LG, Sony and others, or Reeboks and Nikes of the world who have a manufacturing unit in India will be treated as an Indian company. So will be ITC. So they need not apply through multi-brand retail route, because if they apply through the manufacturing route, they have the same facility as the Indian company and they can operate in retail without any restrictions.
For India itself, the quality of the FDI inflow left much to be desired. Maximum funds have come to sectors that are relatively insignificant for job creation. Since 2000, 18% of the total FDI that has come into India is in the service sector, including finance, banking, insurance, non-banking finance companies, credit card companies and outsourcing. Real estate sector stands second with 11% share in total FDI inflow during this period. India's sunrise sector, telecom, has attracted 6% of total FDI during this period. The same amount has come into computer software and hardware companies. Drugs and pharmaceutical companies and auto companies have attracted 4% each of total FDI inflow.
Money which has come into India is in finance companies. It's been followed by telecommunication. Here, our cellular phone industry. And third would be in the Indian automobile industry. You now see a number of Japanese companies, Korean companies, American and even European companies.
Experts feel that no big investment will come to India till multinational giants are allowed to develop end-to-end chains here. In such a scenario, excessive politicization has prevented investors from looking at India.
FII is short-term money. You make quick rupee, a quick buck, come here, withdraw, stock exchange, debt market, etc. The FDI in India has not grown in the last 2 years. This year, we will be lucky if the March ending, we get same amount as it was the previous year.
On the strength of existing evidence, foreign direct investment could remain the most contentious issue for years to come. Political parties blame each other and experts blame politicians for scaring away investors.
Why FDI? Even the local investors, as we see the investment rate has come down in the last couple of years, even the local investors are not sure that what would happen, whether the government which comes in will be industry friendly or not.
And that, in the end, defeats any fruitful assessment of whether it will deal a blow to the small kirana stores.
No large foreign player has opened any store under the multi-brand retail format in the country so far. In the end, this defeats any fruitful assessment whether they will actually deal a blow to small kirana store or they can coexist together. For Rajya Sabha Television, I am Krishnanand Tripathi.